All right, let's get right into a real head-scratcher from the biotech world. We're going to talk about Spero Therapeutics because their last earnings report was, on paper, absolutely perfect. But then the stock got completely crushed. It's a classic Wall Street paradox, and today we're going to figure it out. Okay, so let's dive into the numbers because on the surface, they were incredible. Spero reported an earnings per share loss of just 3 cents. Now, a loss is a loss, but you have to compare it to what people were expecting. And analysts, they were forecasting a loss of 57 cents. So Spero didn't just beat expectations, they demolished them by 54 cents a share. That is a monster beat. So you'd think the stock would soar, right? Well, here's the paradox. The very next day, the market's reaction was just brutal. The stock didn't just slide, it plummeted, a staggering 18% drop. And that's the disconnect we need to get to the bottom of. So you've got this landmark clinical success, a massive financial beat, and the stock tanks. What gives? Why would investors be sprinting for the exits right after hearing the best possible news? That's really the core question we're going to unpack here. To really solve this puzzle, first we have to appreciate just how good the story looked. Let's build the bull case and walk through all the fantastic news that Spero laid out. I mean, just look at the scale of this thing. We already talked about that huge earnings beat, but it wasn't just that. Revenue came in well ahead of what anyone was looking for. And get this, the company's net loss shrank from almost $18 million a year ago to just $1.7 million. That's incredible. And it was all thanks to money from their big partner, GSK, and just being really smart about their spending. And you know, all this financial strength was really built on the back of a huge, huge victory in the clinic. Their main drug, Tebipenem HBr, proved what's called non-inferiority. Now that's a fancy term, but all it really means is that their new pill, which you can just swallow, was proven to work just as well as the current treatment, which you have to get from an IV drip in a hospital. That's a potential game changer.
And the details here show this wasn't just a win, it was a knockout. The trial was so successful, an independent committee literally told them, hey, you guys can stop the trial early. It's clearly working. That almost never happens in biotech, and it's an incredibly strong signal. No new safety red flags popped up, and this puts them on track to be the very first oral drug of its kind for complicated urinary tract infections approved in the US.
So you can imagine management was absolutely thrilled. The CEO, Esther Rajavelu, was basically saying this is a massive step forward. And we're talking about a multi-billion-dollar market. So from every angle, the story looks perfect. A home run in the clinic, a grand slam on the financials. But as we know, the market read a completely different story. After all that good news settled in, the optimism just evaporated, and the sellers took complete control. What's wild is that right after the news hit, the stock did pop. It was up about 7% in after-hours trading, but then the floor just fell out. The sentiment completely flipped, and by the end of the next day, the stock had dropped from $2.36 all the way down to $1.94. It erased that whole pop and then just kept on sinking. And listen, this wasn't some quiet drift downward. The trading volume absolutely exploded, almost 4 times the normal amount. That tells you this wasn't just a few nervous investors. No, this was a high-volume, decisive rush for the exits. The mystery just got deeper.
Okay, so this is the crucial question. Why? Why the massive disconnect? Well, when you really start to dig into the context, there are 4 big reasons that likely explain why the market got so spooked.
So the first and maybe most classic reason is what we call a sell the news event. You got to remember, the really big groundbreaking news that the trial was a success, that actually came out back in May. The stock had already surged on that news. So for a lot of traders, this was just confirmation, and it was the perfect time to cash in their profits. So yeah, you definitely had a wave of profit taking, but it was more than just that. The market's focus completely pivoted. The question wasn't, does the drug work anymore? It became, okay, what's next and what could go wrong? Suddenly, everyone was talking about the long, slow road to FDA approval, which might not happen until late 2026. Then there are worries about the type of approval it could get, a so-called limited use label that would shrink its potential market. And finally, you have to remember, Spero's other big drug program was suspended, so they have all their eggs in this one basket now.
So now that we've kind of decoded the past, what does the future look like? Well, the entire narrative for Spero has shifted. It's no longer about proving the science. Now it's all about navigating the regulatory runway. And these are the key dates that the market is watching like a hawk.
Their big partner, GSK, is going to submit the application to the FDA later this year. Then we'll wait to see if the FDA accepts it for review, probably around the new year, and then the big one, a potential final decision in the second half of 2026. Now, what's really important here is that Spero has enough cash to last all the way into 2028. That takes any immediate financing worries completely off the table.
And if they clear all those hurdles, the prize at the end is pretty significant. Spero could get up to $351 million in future payments from GSK, and that's on top of royalties from sales. This is the massive potential upside that investors are now weighing against all that risk and that long wait.
All right, so after weighing the incredible clinical success against the market's obvious skepticism, here is our analyst take for the next call. After looking at the whole picture, we are assigning Spero Therapeutics a rating of outperform. And here's our thinking on this. We believe that big sell-off has created a real disconnect between the company's solid fundamental position and its stock price. Their main drug is now significantly de-risked from a scientific point of view. That's huge. Their cash runway into 2028 means they're not in a desperate spot for money, which is a major worry for a lot of biotechs. And having a powerhouse like GSK as your partner provides a ton of validation and a clear path forward. To us, the current stock price seems to be pricing in a lot of the execution risk and not enough of the massive potential if things go right. This is not financial advice.